Hello, traders. This is all about the financials setting up into next week, and we could see a massive squeeze in the financials. It all depends on how the markets want to digest this. So just keep this in mind. I'm still bearish. I think the financials are going to be under pressure next week because of the flattening yield curve. And my primary thesis is we're going to. God, I hate when this does this. I think the financials, we're probably going to get some weakness next week, bringing the markets back in. I don't know how much, but probably bringing the markets in. But my primary thesis here, mid-year or so, we're going to be coming down and retesting the this primary trend line on the monthly, and we haven't done that yet on our financials. So, and I don't even think the pattern has completed either. The primary support is down here at the 2290, and we haven't even tagged. We went through there in December, but if we had a lot of chop through there on the way up, and and we're still inside of this range. So I can very easily see the financials back down here retesting the lows this week, next week. So just keep that in mind. And as I have mentioned multiple times, the spread between the 10-year and the 2-year, and that's how the main banks like Citigroup, Bank of America, JP Morgan, this is how they make their money. And there's a reason why all these analysts are coming out lowering their forecast and earnings growth potential for the banking sectors whenever you see this collapsing yield curve. And we have been flirting on the 5 and 2-year. They have been inverting at times. So just keep that in mind. I don't have the 5 on here right now, but my main thing is the 2-year. They are not coming out of the 2-year yet, and the 2-year is kind of like the VIX. It's a flight to safety, and when people go out of the markets, they go into the 2-year treasuries, and basically the money that came out of the markets is still not massively coming back in. Okay, that's what this is telling me. And basically, we need to see a collapse in the 2-year for these spreads to start widening to be long-term bullish for the markets, and that is just not the case right now. So, just keep that in mind. A lot of risk going into Monday for Citigroup's earnings, and we're gonna have bank earnings all week next week. So, a whole lot of risk that they're going to continue to disappoint because of this really tight yield curve that's hitting their financials. Another main thing I wanted to mention here, we have not seen a NIMO. This is your McKellen oscillator. We haven't seen a high read like this since the 2008 financial crisis. And basically, we went from an extremely oversold reading to now we're into an extremely overbought reading. So I do not like the situation knowing that we're going to have weak numbers coming out of the financials. And maybe they're not weak enough and they rally, but we've already come off the lows on the financials. We've had a week and a half to already come off the lows. So the initial short squeeze in the financials has already been put in. So when you already have, this is concerning knowing that the short squeeze is already, most of it's already been taken up and money isn't rolling out of the 2-year treasury. So just keep that in mind, that a lot of risk. Along with the 2-year treasuries, they were loading the boat on TLT. This is your bonds, basically driving down yields. When this goes up, your yields go down. Okay, and basically we're bull flagging on TLT here, and my Fibonacci retracement area, that's based off of my December levels, and basically we had a breakout early January above December levels, and we're coming back in a little bit, but we're still bull flagging right at the very highs here, suggesting money is still not coming out. There is not a flight to safety here. Basically, we've seen a short squeeze or bear cat bounce in the markets, and monies are still not rotating, and that could all change next week. But I just wanted to point out the primary thesis: most people are not loading up to the bull side on the markets. Okay, along with the financials, high yield bonds, and basically this really started was a major problem that, in my opinion, major driving force for the sell-off in the markets. There was basically a liquidity issue in the high yield bonds with all the there was a whole slew 130 140 some hedge funds into last year that shuttered their doors. They went out of business, and it caused a panic in the high yield bonds area. Plus, you had a all the weakness in the oil patch. I mean, record drops in the oil because after, if you don't remember, Trump convinced the Saudis to come in and produce a bunch of extra oil because Iran's production was going to be taken off the market. Well, that didn't happen. And so all that extra supply came into the market, really devastating the oil complex. And basically, we got a devastating blow, two-handed on the high yield bonds. And now we're coming back. We're catching a bid, and we are breaking out above December highs as of today. So basically, my takeaways are that we're breaking out of today towards the end of the week, but we only broke out the last 3 hours of the trading session. So there wasn't a lot of value put out. There's a lot of volume on the breakout today, but the true value for the week is down here at the 83.90. So basically, we could have a false breakout here very easily on the high yield bonds. So that's my takeaway on the high yield bonds, that we might be in a topping pattern here. We're at the, like I said, we're at the December highs, and this could be just it for the short term on the high yields. Okay, it's really important to keep things in context where we are on the longer time frames, and we're still, holding above this primary trend line. And it's going to have a lot to do with how the financials, the reaction to the financials earnings is going to be perceived next week. All I know is in the bounce, the financials are really underperforming the rest of the markets. So if for some reason Citi comes in and has less bad news on guidance and stuff, we could see a massive rally in the markets. I'm not in that camp. I think the NIMO and the TLT and the 2 year treasuries, they're all telling us that there's a lot more trouble here than what people want to realize. So, and the government shutdown, I think that's a outlier for the global markets. And we're probably not, it's probably not even going to be until March until we have some sort of significant deal with China. So basically, I'm thinking we're going to be coming right back down here this month. We're probably going to be closing right about the 11,547. So we're looking about a 300-point drop in the NYA by a month's end, in my opinion. That's my target. You see how we've just been on that. We were on that several times on the way up. That trend line acted as support, and that's why that's what I think is going to happen here. We're going to be possibly coming down to it, and then opening February and deciding whether or not to resolve higher from there. That's kind of my theory. Okay, my theory that I'm floating out there. Basically, I'm got my December trading range, and we're coming right up to that 61.8 on the December trading range, and we're going to hit that tomorrow. So I think what we're going to do, we're going to catch a little bit of bid in the morning, and that is going to act as a resistance zone for possibly even Friday afternoon, a potential topping pattern for this formation, because we already know it's really extended, extremely extended right now, and it needs to take a breath. And so I'm thinking midday or so tomorrow, if not sooner, we're going to see some responsive profit taking in the markets. Okay. And also, if you look at your cues, basically the same distance to that 61.8 of the December range. Uh, to me, that makes a lot of sense. Profit taking right there. And if you look at your IWM, it's already hit the 61.8 as of today. And keep in mind, a lot of the driving force on this here has been the well, you've had a bid in energy, which has helped it, and you've had a bid in your biotechs, which has helped it, and you've also had a bid in your regional banks. So the banks are likely to uh, be under a lot of pressure tomorrow, in my opinion. So just keep that in mind on your banks being a lot of pressure. And if you look at your IBB, and this here is just a beast. But basically, the December range, we have completed the 100% retracement of the December range. So if you're looking for some relative strength, we know how bad December was, and the biotechs have taken back, as of today, 100% of the sell-off that we saw in December. Okay. So another thing, you got your 0.618 on your XLE right here, right now. And I saw after hours, Goldman Sachs, they were raising the price targets for crude oil. So that might be a catalyst here. I'm not sure. We were just discussing in the chat room about this being a potential short zone, despite that was before the news came out from Goldman Sachs on a expectations hike on the crude space. And if you look at your U.S. oil, this primary trend line keeps getting pushed out, and we kind of dojied out. See, we kept pushing it out, and we've dojied out on that as of today. And I thought this was a responsive sell zone for crude coming into tomorrow. That's what I was looking for. So seeing that upgrade after hours, that's got me a little confused. So I had actually planned on putting some shorts in the crude oil space. So um, we'll see what happens here. But yeah, looks like but it's almost crude oil's almost taken back all the December range too. You know, we're right up here near the highs of the December range. Something to take note of: our basic materials, the backbone of the industrials, what started catching a bid today. So I just wanted to point that out. Seeing your basic materials catching a bid, that is a uh, bullish scenario for the markets. I mean, seeing that happening, and basically, we started breaking out yesterday from prior highs and putting in value at the highs, and today we continued that breakout. Okay, and this volume distribution has completed now, because you see that delineation there. So we do have a completion of the profile. So, if the markets were to catch a sell signal, this right here can just be completely ignored, and that was all the last 45 minutes or that last 30 minutes of trading. So, yeah, we could very very easily see the longs get captured here in the overnight session on the XLB. But something to keep in mind: a little bit of relative strength in your basic materials. And if you're really bearish the market, you don't want to see. Um, this is your leading sector, okay, for industrials, and you don't want to see a responsive bid in your industrials to think that the markets are going to implode here. Um, so just keep that in mind. That seeing strength right here has got me little confused if I want to put in a lot of short positions, seeing the relative strength in the materials, basic materials. So just keep in mind here, your XLF, we're not even back to 50% of the December range. So you have relative weakness so far this month on our financials going into the earnings season. So, but yeah, we've already had our short squeeze on financials, and we know the numbers are going to come in bad. Are they going to come in bad enough? That's the question. And like I said, we've come down so far already. Anytime you have a major down move, and you're going into earnings season, there's always that potential of a mega short squeeze in the markets. So just keep that in mind. Yes, we have this does look like a bear flag, but you just don't know for sure, and it could be just as easy a bear trap. So I just wanted to point that out going into that earnings starting Monday. Your semiconductors, they really took it on the chin with all the Apple news hitting the tape. And once Tim Cook came out and he had those calming words, soothing words coming out about the Apple stock, Apple started catching a responsive bid, saying that he thought everything was overblown. So that implies that he thinks that the markets are implying that Apple's not going to be doing quite as bad as what everybody seems to think. And we're starting to see some recovery and some upgrades in the semiconductor sector. And so we've crossed over the 50% of the December range as of today. So, this is the neutral zone for December. Okay, so like I said, I do think the spot, the NIMO is so extended right here that this is most likely, in my opinion, probably a near a topping pattern for the SMH, in my opinion. So we'll see what happens here on that. And in the same breath, Apple was the one that's really destroyed it. Apple's right down here, basically compared to December. Apple's right down here, right near the lows of December, and it really hasn't. Even after the Tim Cook news, it can't even get out of this lower fib fan or fib retracement area. It hasn't even been able to lift off from that yet. So this is not overly bullish at all for the semiconductors or Apple in general, in my opinion. So this is the one, in my opinion, that's probably going to be breaking December lows far before anything else if this market decides to sell. So just keep that in mind. This here's my favorite short, and I got three. I'm in more than one chat room, and I know a lot of people that have Apple puts even at these lows right here. So just keep that in mind. And then the other backbone of the markets, that's your transports. And look at this, relative weakness in our transports. Basically, what I want to see is the transports and your semiconductors leading the charge to the upside. They're not. So, in my opinion, this is not an overly healthy market, in my opinion, whenever those two sectors are lagging instead of leading. And this is actually doing better, far better than Apple, but it's still not healthy at all, in my opinion. So it's even weaker than the semiconductors. So keep this in mind. All the whole tariff stuff is having a devastating impact on our transports. And looking forward, that suggests that many of the industrials are going to start. We're starting to see a topping situation in the industrials. In my prior video, I had mentioned Boeing. It was going to retest the 125 SMA. And guess what? It not only retested it today, it blew out past it. So this Now it's crossed over into bullish territory, in my opinion, for Boeing. So, uh, really nice setup going on right here in Boeing. Explosive move today. So we'll see how the markets fan out here. But like I said, um, I don't want to press longs, but this here is one of the areas that's really looking incredibly strong in the markets. And Boeing really hasn't sold off that much in the grand scheme of things versus a lot of the other parts of the markets. Now, on the flip side, on the financials, I was talking about how bearish I was. I am bullish Goldman Sachs and Morgan Stanley and State Street. Those are brokerage houses. So uh, just keep that in mind. State Street kind of upgrade today, I believe. So just keep this on your mind. These are not the ones you really want to be shorting. And I had a long on this, and I've taken my profits on it. Uh, so I did not want to have the exposure for the at least the beginning of the week on Goldman Sachs with this earnings news coming out, because if the markets do catch a sell bid into the first of the week, which that's what I think the scenario is going to be, these things here are really primed for some weakness for the first of the week, in my opinion. And look at this. This is a bearish candle, very bearish candle for Goldman Sachs going into uh, the first of next week, in my opinion. This looks like a topping candle. So just keep that in mind. The Fang, Goldman, Facebook is still my favorite to the long side if we do get some responsive buying. And so just I'm really leaning bearish the markets overall, but the Fangs really continue to outperform here. And they do have room based on the. Let me show you on the FDN here. But I'm looking at the 151 area for Facebook. And on that scenario, let me show you FDN. Okay, FDN, we had very strong volume today on our internet ETF. And my main thesis right here, we are in the massive accelerated. This is a very accelerated range for the upside or the downside in FDN. We seem to be breaking out of this. So if the markets were to catch a bid, I do think our FANG names are going to outperform the next couple days. So just keep this on your radar that if you want to be long anywhere in the markets, right now, right here, right now, the FANG names really look prime for a nice move higher if the markets are going to catch a bid. Basically, I'm not in that camp, but good luck and good trading. And I will see you guys on the flip side, I guess, and we'll see what happens. But I'm going to have a few. I'm going to have some shorts in some of the banks. I'm going to put those on tomorrow, and I might actually put a small Facebook long just in case this scenario on the internet stocks does seem to pan out here. So I'll catch you later.